Boston. Good morning, Consensus. Welcome. This is amazing that we're finally here. This is the Bitcoin stage, well, the beginning of the Bitcoin stage. We're going to explore some pretty amazing topics, and I think that that is the way to start a real crypto conference, is to start off with a Bitcoin session. So welcome, and thank you for coming to it. So first off, the first topic is From White Paper to Wall Street, the Evolving Bitcoin Investor. Please welcome my colleague, fantastic writer of the Crypto Long and Short newsletter, which you should be subscribing to, George Kaloudis, who's joined by Grayscale CEO Michael Sonnenshein. Guys, come on over. I guess I go this way.
You want to take care? Ooh. Good morning.
Good morning.
Good morning. How's it going?
It's going, I think, great. It's great to be a Consensus.
Yeah, I'm happy to be here too. So guys, like Christy said, I'm George Kaloudis. I write research about Bitcoin here at CoinDesk, but you're not here to hear me talk. You're here to hear this guy talk. So this is Michael Sonnenshein. He is the CEO of Grayscale Investments, sister company to CoinDesk under the DCG umbrella. And I think it's probably perfect to just dive right in, right? So I'll start talking a little bit about the white paper because that's what brought me to Bitcoin, and then you can talk a little bit Wall Street since you're, one of the guys on Wall Street, right?
Sure.
So, Bitcoin started because this guy, or group of guys, group of gals, group of people were really, really mad about the bad money that was out there, right? And then, the financial crisis, great financial crisis happened, and someone released some open source code, and we said, hey, we're going to have this hard money that runs on this decentralized ledger. And, 13 years later, we have $1 trillion asset that a lot of people are using as sort of a, FU money to Wall Street, some would say, but I'd say you would argue otherwise, right? So, Wall Street answers to clients. What do the clients want? Why do the clients want Bitcoin?
Well, I really think in order to kind of answer that question about today, we got to talk about the evolution of what that's looked like. So at Grayscale, we've really been focused on getting, access and exposure to this asset class for clients all the way back to 2013. And I think we were early to identify that crypto would become a bona fide asset class, investors would want access to it, but that it was going to be different, right? It's going to be different than buying a stock or buying a bond or, buying an ETF, because crypto, you need to figure out where to buy it, how to store it, how to transfer it, how to safekeep it. And early days of crypto was really just kind of in the Silicon Valley, kind of Sand Hill Road crowd, thinking about crypto at their, cocktail parties and things like that. And what we've seen over the last 8+ years is that it has really done kind of two things in an amazing way. Number one, it's an asset class that first actually went into the hands of retail before it went to institutions, which is rare as kind of Wall Street product innovations and asset classes go. And I think, two, the momentum and the speed and the agility and the resiliency that the asset class as a whole has had has been unprecedented, right? The fact that we are now 13 years into the life cycle of Bitcoin, and you now have a healthy two-sided market globally. You have derivatives, you have lending and borrowing. I mean, you have all of the trading tools and infrastructure that you see around other asset classes. That's all happened really, really quickly in an unprecedented way. And so from an investor perspective, what's so exciting about this asset class, and Bitcoin in particular, is that it really has come to mean something different to everybody. So whether you're on the digital gold narrative, or perhaps excited by the underlying technology, or I know someone like yourself is pretty excited about crypto and Bitcoin specifically as a value transfer mechanism, that's what's so exciting about it. It means something different to everyone and doesn't squarely fit into the definition of currency or commodity.
Sure, and this might sound like a layup question for you given what you do, but you said that, Bitcoin and crypto doesn't really trade like normal securities do. But isn't that exactly what Grayscale is trying to do with the GBTC and your other instruments? Or?
Yeah, I mean, I think to clarify, what I'm trying to say is that there are certain attributes that Bitcoin and crypto generally has that do make it a distinct investment experience, perhaps from investing in traditional, asset classes. But certainly at Grayscale, by offering a whole now family of digital currency investment products, we are trying to open up the opportunity to investing in crypto in a way that's safe, reliable, and familiar for investors. Because again, crypto is going to be different as an investor and trying to navigate that.
Yeah, and you talk about safety. There are two parts of safety that I think are really, really important. One is, am I going to lose my asset just outright?
Yeah.
And the other side is the classic one that, my friends and family ask me is, well, it goes like this, up and down, up and down, up and down. So how do you guys, convince your investors or educate your investors on being okay or not being okay with that level of volatility, right?
I think generally speaking, the Grayscale investor is somebody that has a long-term time horizon for their crypto allocation. So these are folks that recognize it's early days for the asset class. We've certainly developed some amazing and killer use cases for crypto, but as we've seen and continue to see, and certainly at events like this, you're continuing to see the development community continue to envelope and develop new use cases, things that didn't exist a couple months ago, whether it's the emergence of DeFi, NFTs, and who knows where we're going to be in 6 or 12 months from now. And so I think there's that kind of patience that investors have. And two, in terms of kind of stomaching that volatility, it's not appropriate for every single investor. And we'll be the first to say that as the largest asset manager for crypto globally. You do need to be able to stomach volatility. We have now experienced drawdowns sometimes in excess of 50% several times over the last 8 years. And so as investors think about it, it does help them to build more resilient, more diversified portfolios.
Okay, to push against that a little bit, right? We talked about the white paper at the beginning. Bitcoin is supposed to be for everyone. It's designed to be for everyone. So you saying it's not for everyone now because of the price volatility, but you earlier spoke a little bit about the cocktail parties in Silicon Valley.
Yeah.
And is this tech bro money now, and it will ever become money for everyone, or
Sure.
What's the shit? I suspect, just given what our preparation for this talk, there's a demographic shift that is happening, but does it still skew heavy to the tech bro culture of Silicon Valley?
Well, there's certainly no question that crypto does, and Bitcoin specifically, and its emergence through this white paper does represent the democratization of money, right? You can't really get excited about Bitcoin until you really start digging into the history of money and how it's evolved over time. Ultimately, society is who dictates what money is, right? And I think that as we're seeing, crypto and Bitcoin specifically, certainly in the developed world here in the US, you are seeing more engagement in and around it for investment purposes, for speculative purposes. Other parts of the world, Bitcoin represents financial inclusion. It represents the ability to finance a business, finance an education, save money, send money to, family members, things of that nature. And so we have to remember that ultimate, kind of more utopian view of the world where Bitcoin and these types of assets can create a more equitable, more inclusive financial system. We're still in the very, very early innings of it, and I hope that everyone globally can be patient as it continues to develop towards that.
Yeah, so I've one maybe foreshadowing question for you.
Okay.
Because the next panel I'm doing is going to be about Lightning and payment rails, and you talked about different use cases. And I like asking this question of many people who work in Bitcoin and trying to convince
Sure.
people to invest in it, not only just to make money yourself, but to protect wealth. Is the Bitcoin as a payments rail mechanism and the Bitcoin as a store of value idea, are those contrary things, right? This is, people talk about time value of money. I don't want to spend $1 today if it's going to be worth more tomorrow, right? Do those things go against each other? Can they coexist?
They can completely coexist. I think when you look at the world today and you look at some of the existing tried and true remittance rails that are available, oftentimes those are going to cost individuals moving value 10, 12% on a given transaction. And the reality of the world we live in today is that things have evolved so that information is moving instantaneously, email, Twitter, you name it. But why is it that value somehow hasn't kept up with the speed at which information moves, right? We live in a globally connected world. We live in a society that moves 24/7, not just Monday to Friday, and not just within the confines of, when the Fed wire system is open, or ACH or Euroclear, et cetera. And so I think certainly the remittance angle and the ability to move value around the world is certainly there. That being said, until the monetary base embedded in crypto and in Bitcoin specifically grows to be a lot larger, a lot of the stability that a lot of folks do see and want from it as a store of value, as a digital gold, as we get there and as that monetary, monetary base gets larger, I do think we will be able to see more people thinking about crypto through that lens.
Yeah, Bitcoin can be a global settlement layer, which can do those things.
And there's going to be use cases, and many of them already being developed, where assets, be them financial assets or non-financial assets, are going to be moved over the Bitcoin network, and oftentimes senders and receivers won't even know it's the Bitcoin network over which that asset's being moved.
Abstract that away a little bit.
Exactly.
We've been kind of preaching to the people. Let's talk about Wall Street.
Okay.
Want to talk about Wall Street?
Sure.
So, well, that's the second part of this talk, right? So, last year, maybe 2 years ago, COVID kind of,
it's all a wash.
It's just gray space, right? Time's a flat circle. Everyone was talking about institutions getting into the space. Everyone wanted institutions to put Bitcoin in the balance sheet, Bitcoin in the balance sheet. That kind of became the thing, and that's what really pushed us up to, the 60,000 level for $60,000 Bitcoin level. But in doing that, a lot of these institutions came in, they started buying Bitcoin, and the way these institutions, at least my theory is, view Bitcoin is as a risky asset, right? It's like a tech stock. So when things start looking bad in the economy, like, I don't know, the CPI print just came out, I think it was 8.5% or higher than that. When that happens, they get scared and they start selling stocks. And they start selling their other risky assets. They start selling Bitcoin. So we're starting to see this correlation between the NASDAQ and Bitcoin. Is that bad? Is that good? Is that just neutral?
You've started to see quite a bit of criticism around this, right? That Bitcoin, and certainly the team at Grayscale and a lot of the research we've developed has looked at certain events that have happened, throughout the last couple of years, whether it's devaluation of the renminbi or Grexit or Brexit or any of these kind of geopolitical events. And in those times, you do see investors flocking towards assets like Bitcoin and assets like gold, which has historically served as an inflation hedge or kind of a flight to safety. What we're seeing now, and I think a lot of the criticism that Bitcoin is getting being coupled with tech stocks and is often that it's in fact looking quite correlated. And over a longer term horizon, that's actually not the case. So we continue to feel that it's too early for a lot of folks to continue to believe that Bitcoin is correlated to tech and tech stocks and risk assets. I do think over time you will see that begin to decouple, but you also have to examine it against a backdrop today, right, of rising rates, inflation, and quite frankly, there isn't really any asset class out there, crypto included, that can kind of shelter itself from a lot of what we're seeing, which is a lot of leverage coming out of the system, as well as a lot of, kind of suppression of prices generally. Yeah,
so to shorten that up, zoom out people, it's okay. You guys just had some big news. Somewhat big news. So GBTC is one of your products. It's supposed to be, this way to hold Bitcoin in your brokerage account, in your IRA, easily. But
not supposed to be. It is.
It is. Well, it's supposed to be, and I say that because it has been trading at a discount to par value, right? So if it holds one Bitcoin, it's trading at a lower level than that. But recently, you've bolstered your legal team with a former Solicitor General under Obama. I don't really know what that means, but is Grayscale going to sue the SEC if they keep dragging their feet on the spot ETF approval, or?
So quickly, because I know we're running out of time. Essentially, Grayscale's flagship fund is the Grayscale Bitcoin Trust, ticker GBTC. It's the largest Bitcoin fund in the world. Going all the way back to 2013, this product was intentionally structured to always be an ETF. We always knew that we would ultimately get there. Today, the product is about 20 some odd billion dollars large. It has almost 1 million investor accounts across the United States, and we have been working actively to convert it to an ETF so that it can, in fact, fulfill that ultimate potential that it has structurally. Today, there are billions of dollars of value that are being held back by the SEC because they haven't yet approved a spot Bitcoin ETF from coming to market. And so as we're approaching our July 6th deadline when the ETF, the SEC ultimately needs to approve or disapprove this order, we're really, as an organization, putting the entire team behind this effort. And that includes working with legal counsel internally, our attorneys at Davis Polk, and yes, recently bringing on a new legal strategist to the team, Don Verrilli, who's the former Solicitor General. And, we feel that investors have really patient, waiting for an ETF. They deserve it. And quite frankly, with GBTC trading every single day, tens, if not hundreds of millions of dollars, the question really is, who's the SEC protecting by not allowing this product to come closer into the regulatory perimeter under their purview?
Yeah, I'll say they're not protecting investors, but I don't know if you're allowed to say that. Anyway, we're out of time, unfortunately. We're supposed to have, I don't know, I feel like I need 30 more minutes with you, but.
We'll do it again.
Yeah, Michael Sonnenshein, Grayscale. Thanks.
Thank you.